Welcome to Individual Investor. After starting my series on financial ratios for stock analysis, I realized that I never created any content to introduce people to the concept of financial statements. So that's what I want to do in this video. We're going to go over financial statements in general, and then we're going to touch very briefly on the three types of financial statements, which are the income statement, the balance sheet, and the statement of cash flows. Enjoy. Financial statements are written documents or records that explain the financial condition, performance, and business activities of a company over a specific period of time. These are typically generated on a quarterly and yearly basis. Financial statements are heavily audited by different parties, including third-party auditing firms, accounting firms, and even the government, to make sure that the data is accurate and that it reflects the real condition of the business for purposes of paying corporate taxes or for investors and creditors to assess the real state of the business before investing or lending money. Companies that are publicly traded must include their financial statements in their annual and quarterly reports. Companies that trade on U.S. exchanges must comply with the SEC, and they are mandated to provide their financial statements in their yearly 10K forms and in the quarterly 10Q forms. Okay, now that we have a general understanding of what financial statements are, let's take a look at the types of financial statements. But first, if you are enjoying this video so far, I would appreciate if you can click the like button and subscribe to my channel. Thank you for your support. All right, back to this. There are three types of financial statements: the income statement, the balance sheet, and the statement of cash flows. Let's start with the income statement. The income statement reflects the performance of a business from a revenue generation perspective over a period of time. Going back to the basics, the number one priority of a company is to make money by selling its products and services. So the income statement captures things like revenue or sales, expenses, profits, margins, etc. And when you look at an income statement, ideally you want to see revenue or sales increasing over time while maintaining good margins. At the end of the day, what matters is not only how much you sell, but how much you get to keep. And this amount of revenue that you get to keep is called the bottom line, or the net income. And the net income is probably one of the most important figures that we use when analyzing companies' performance. The net income is also referred to as the earnings. And as you know, we use the earnings for things like earnings per share and to calculate the widely used price to earnings, or PE ratio. The second type of financial statement is the balance sheet. As the name suggests, the balance sheet is about the balance of what the company owns versus what the company owes. A company has to have certain assets like cash or factories, machinery, IT infrastructure, physical space or properties, etc. These are assets that the company owns. Now, on the other hand, companies might need to raise capital or borrow money, especially in their early days as they are growing or expanding, or perhaps during difficult financial or economic conditions in order to sustain their operations. So when companies borrow or raise capital via debt, this will be considered a liability. Also, things like financial leases would be considered liabilities as well. So now what we can do, we can take the assets and subtract the liabilities, and then we're left with the equity, which is also called the book value. Now the book value is what the net assets of the company are worth if we were to liquidate the business, which means basically selling all the assets and paying off all the liabilities. And finally, we have the statement of cash flows. The statement of cash flows show an aggregation of all inflows and outflows of cash for the company over a period of time. There are three types of cash flows. You have cash flows from operations, which include all the inflows and outflows from the core business operations. So what would be a core business operation? If you, for example, make chocolate bars, then the cash flows from the sale and cost of distribution of your chocolate bars will be something that goes under operations. Then we also have the cash flow from investing activities, or CFI, and this has to do with actually investing in the business. So going back to the chocolate bars example, if you buy a new piece of machinery or equipment, or maybe a new chocolate mold or mixer, then this would be considered an outflow under cash flow from investing, since you're buying an asset to basically increase production. And the third type of cash flow would be the cash flow from financing, or CFF. This includes things like the interest that you have to pay to bond holders if you issued any debt to raise capital, and also if you are paying any dividends to shareholders, this would be considered also an outflow under the cash flow from financing. Okay guys, to wrap this up, I want to show you where to find the financial statements using a real example. So in this case, we're going to take a look at Tesla. In future videos, we're going to do a deeper dive into each financial statement, but for now, I just want to show you where to locate these financial statements. So one place you can go is you can go to the investor relations on the company website, and then if you go to the investor relations section, you can click on SEC filings, and this will take you to an archive where all the filings or forms are for Tesla in this case. And then if we click on annual reports and quarterly report to apply the filter, then here we have all the forms, 10Q and 10K. And here we have the 10K form that was submitted last year in 2021. And if we open that up, then here we have the form that was submitted to the SEC. As you can see here, the link is actually the sec.gov. And if we scroll down here in the index, here you have the link to the financial statements and supplementary data. So if we click there, then here you have on the top left the different financial statements that we just spoke about. So here we have the consolidated balance sheets, the statements of comprehensive income or income statement, and here we have the consolidated statements of cash flows. So if you click on any of those links, as you can see here, this one takes you to the balance sheet, and here we have the assets, the liabilities, and the equity. Okay, then if we go back, we can go to the statement, the income statement. Here we have the net income for the year 2020, $862 million. And if we go back, then we can go to the cash flows, statement of cash flows, and then here we have the CFO, cash flow from operations, and then here we have the CFI, cash flow from investing activities, and here we have the cash flow from financing activities. And as you can see, there's a little bit of detail here and some things that we didn't even cover in this video, but don't worry, I'm gonna be doing separate videos to deep dive into the financial statements, and we're gonna take a look together at some of these line items and explain what they are. Okay guys, that's all I got for now. I hope that this overview of financial statements was informative and useful. I want to thank you for joining me today, and I'll be looking forward to seeing you in my next videos. Take care.